Hey, good morning, everybody. Hope everyone had a great weekend. I'm doing an update this morning. I'm going to hit on the major global macro markets, meaning the dollar Dow. I'll just do briefly tens, gold, and I'll hit on oil. And then I'll just let you guys know what we got going on this week as far as I'll be putting some details up about a webinar. Stay tuned. A little later today, I guess I'll put out another email. If you guys want to sign up this Thursday, I'll be talking a little bit more about our prop program and the options program for those of you that want to go more in depth on that. And then, hey, also, I've probably haven't done a great job reminding everyone, but I took the cycle edge down to just $1 to join for the next 30 days. I'm going to run that all the way through April. So if you guys are new to us or you're in the chat and for whatever reason, so our main kind of flagship real-time alerts, um, service across all markets is right here. It's $1, so you can get access to that just by clicking this. It'll pop you over, or come into the chat room and you can ask me about it. Let's just get into markets. So I like to start with the dollar, right? If you get the dollar right, we get a lot of other things right. And on the right here, I have dollar index. So a couple things to note. If we do a top down on the monthly level, we're still a long-term bull market. We can see that that was our call in 2014, that we were starting a new long-term uptrend in bull market for the dollar. And then that's continued even though we had a little bit, faked a lot of people out at the beginning of 2018 because we broke some of the averages that a lot of the street uses, being the 50-day. But we ended up holding the 200 here on the monthly, and which was pi on the weekly, I believe. But we still have a up cycle on the monthly. The weeklies, here's a hold of pi right here. This was a good call. We had to stick with euro shorts and then added to dollar longs and euro shorts when we broke this kind of basing period. But that's the fractal area that I was just mentioning off the monthly. It's the same area on the weekly. And then so we just recently held pi again 3-4 weeks ago, coming into the end of February, early March. So everything's still long-term bullish for the dollar. And I think we've talked about, with all this risk off going on globally and rates being very close to zero bound in the US, that there's not a whole lot of room for the front of the treasuries to move, but there's still going to be a scramble for dollars and shortage and blah, 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 blah. So the long-term trend is still, I think, that we can move higher. Now, here's what I want to kind of talk about that's important this week and then into the end of the month. When we look across these markets, I'm going to show you here in a second. We have a weekly cycle and the daily cycles all kind of pointing towards a dollar's pullback and maybe a stock rally this week, with a continuation of the weekly into month end. So we're going to see what wins out, meaning here we have a weekly cycle that's turning back down. That would, if you follow this weekly cycle, if that's where price and everything wants to cycle to, that'll put you into the end of the month, into the early part of May on that cycle. Now, when I go to the daily, okay, here the dollar's been in this rally mode for last week with the cycle. It's just done a great job, really. We rallied here off the lows in the early March, made a high, pulled back, made a higher low, rallied last week. So there's potential here that we could see this turn into the end of the week. And that's kind of what I just highlighted in the cycle edge room. Following Marty's stuff, you guys use his AI and Socrates. He's got a turning point here this week, April 6th. And he's talking about 24,600 on the up. Let me finish what I was going to say about the euro. I'll come back to that. Sorry to jump around. Okay, so those are the thoughts on the dollar, is that you really need to pay attention to this daily cycle. And over here on the euro, it's just pretty much the inverse, but we failed at pi on the daily back in the beginning part of the year. We just most recently had another pi cycle the end of March. But notice, I mean, this daily cycle, we've been talking about it forever, for months and months, just how good of a job it's done cyclically. It's just really been the rhythm and the ebb and flow. So we're high into the cycle. We were reestablishing larger shorts. We had a nice run last week. And so there's definitely potential for this to come back up, guys, and you get a shot at maybe selling euros again, 111, 112. So I'm okay with staying core short, but you should have been taking some profits into the end of the last week or this morning if you haven't. And then just be patient, raise some cash. And then if we get, again, the daily cycle back up, that's a great place to sell. All right, so notice that it's going to be the same here on the Dow. Pretty similar cyclical action. Get rid of these drawings. Oops. What's that? Okay. Show you where we covered NASDAQ and some shorts last week. Okay. Do a quick top down with the Dow. And then I'll come back to what Marty was saying. So monthly level is still technically holding on to what we call the bands in the TMS. That was this level around the lows from the last setback we had, Q4 of 2018. So we broke it intra-week. However, we closed, you'll notice the month above that level. So still haven't closed the month below the TMS. And if we were to do that on this monthly time frame, it points you to, the model says, a retest of 1500 to 200, and which totally lines up with all the lows we had back in 1560. That's where I think we're going. Doesn't really matter what I think, but that's the scenario that I still think needs to play out. Doesn't mean we can't bounce first though, guys, and then make a lower low. So anyway, that's the monthly, and the monthly cycle is still down into May. So this is what I mean. The cycles will give you the kind of the roadmap, but sometimes it's a matter of, okay, the daily cycle did a good job and the monthly cycle did a job. Whereas the weekly, you might get something that kind of hangs out like this for a little bit longer, right? So this monthly is key. It's showing you that there's more of the same to come into the summer, or into May at least. So that's why I still think we have room to retest that 15,000 level. Plus, it just makes sense between how bad the fundamentals are and how much the economy is getting wrecked. When we go to the weekly, it paints you that scenario that I talked about where you could potentially rally into the end of the month. Okay. And I'll tell you the ways to trade this when those cycles are kind of conflicting. So the weekly did a really good job here to start off the sell-off. And then it was 1, 2, 3, 4. This was an 8-week countdown, guys, into the low. I've highlighted that before. So the weekly did a really good job there, and it is turning up. Now notice this wedge. From a price perspective, I was talking about time. Now from a price perspective, this is what you have going on. All right, on the weekly time frame. And this is going to come down, and you're going to see the 8 right here. This is going to be a pivotal spot right in here. All right, just as is on the downside, last week lows is the pivotal spot on the downside. And this area, I'll show you on a smaller time frame, but it's around 22, call it 22,000, 23,000. It's more of an area than very level specific. Okay, now here's the daily. Again, back to similar view that we have on the dollar, that this can cycle back up into the end of this week. Okay, And then here's another thing that kind of makes me think that might be the case. When we look at just the price action, when you see how we've made this low here as a topping tail at the bottom of the move. Usually you see a bottoming tail, but the fact that it was still a topping tail and you took that out, that's actually a bullish setup, especially at the end of a move. So we knew we were due for a bounce. We talked about that. I highlighted this level below 20,000 here on the intermediate term. This was the swing line. So without getting too much into the details, we hadn't taken out the prior candle's high on this daily swing line until all the way back here in early March into February. And we did that right there. That's what that trigger was. Now that was an intermediate term pivot that allowed for this bounce. All right, and then you bounce to a lower high with the daily cycle, and then we did cycle lower last week, and we covered stuff really well Friday. Here's a great example on the NASDAQ, covering shorts. Boom, right into pie on Friday. That's what you wanted to be doing, right? Now, again, now the daily cycle could come back up. So the news flow seems to be, oh, Europe's past peak of the virus, and then now you've got Wall Street wanting to float the narrative of maybe there's a cure for this or a better test for this. So they could easily continue. I mean, Trump's kind of taken that stance that he thinks there's signs that we're peaking. So that could be the narrative that they want to run with. You know, there's usually only one thing that they all, obsess about. But that's the scenario to get back to a move back up. And no, I don't think it's a huge move back to like 26,000. A lot of times when you have a real money candle right here, like this is, this is a decent sized candle. Now these are big bars all in here on the downside. I mean, this is huge vol, but this relative to like the week prior is a pretty good sized bar. So there was room to think that this would push you up. And then you guys know that my traders know that that establishes what we call our wall. And then we held 50% last week of that move. So the fact that we got a lower high or a higher low right here, guys, with the daily cycle, if you get a higher low like that, you could easily see a slightly higher high. Potentially, the highest I would think we would get be back towards the bands, and the breakdown levels here at 26,000. That would be a hell of a rally. But there's definitely room to come back to last week's high, and then we would see maybe you run the stops and you suck in some longs and you make that higher, you make that lower high, but it's kind of it's on this type of track. Get the higher low, sometimes that throws you to a slightly higher high, and then you come back down. So this daily cycle is going to be very key this week. And what Marty was saying, this is kind of going to be a long update. So he's talking about 24,600, which is way above the market as far as like saying don't expect any type of serious long-term rally, which is obvious. He's saying that like you would have to get above this area. It's just totally in line with our model. But I care about what his timing, his turning points are. So this was a turning point for this week. May see a high rather than a low. And if that happens, then expect further decline into the end of the month. And then he's highlighting the 1,500 level on the downside, as well as a little bit higher than that 1,700 level. But I definitely agree with that 1,500 level. He was talking about, they were at their conference, they were talking about something strange unfolding, a high into January. That lined up with what our call was, that we could peak out with all our stuff, and then a correction of 20%. But he's saying even a market move down of, I don't know how he gets 51, but a 50% retrace, that puts you into that same 1,500 range. That's what I've been saying. So I agree with that too. No, so he's saying watch this for turn Monday and then Thursday. And when I look at our model, the daily cycle will line you up with Thursday. Right? So So Monday tends to sometimes be one direction, and then Tuesday you turn around and they call it turnaround Tuesday for a reason. But notice this daily cycle, if it comes back up, it puts you into a high around the 9th or into early May. This is what I've been saying this morning. So here's what he's saying around those two turning points. If you get above, he's got 22,595. I was telling you guys it's basically that same area. 22,579 in futures is that high. So he's saying if you get above that level, that would matter. But he's saying if we get a high this week, then you should expect a move down into the end of the month. And then conversely, if you break below 19,175 and you make a low this week, that would produce a bounce into the end of the month. So essentially is what he's saying, if we were to make a low this week down near the lows here, say 19,000 or 20,000. So it's basically saying it's similar to what our model is saying, is that if you rally with the daily cycle and we get a lower high, then you should expect a low into the end of the month, right? If we make a low, whether it's here this week or down here, all right, this week, then you get cycle inversion and you can rally with the weekly cycle into the end of the month. So whether it's going to be key whether we get a high here or a low this week. And I'm not sure if we close here whether or not that you could say that's a low. I would be a little bit more inclined to go with the daily cycle down next week. But anyway, those are kind of the fence posts and the different turning points in time. Both our model and his is kind of lining up similar. So we can revisit this throughout the week and then to the end of the week. What else? I said I would hit on treasuries. 10s are kind of saying similar. All right, get the futures up. Weekly cycles remains kind of high. It's kind of indecisive whether or not it wants to cycle down. We're a little bit overbought as far as the RSI goes. The daily bonds are kind of out of sync a little bit. I keep highlighting that because they rallied first and so hard into the rate cut on that Sunday evening. And then they just rallied so hard and so fast that they pulled back, even though stocks sold off in this time frame. So they both bonds and stocks came off, and it kind of put them a little bit out of whack. But if bonds pull back with their daily cycle here, which looks like how we're opening up the week, that would kind of coincide with the stocks continuing to rally into the end of the week. So I think there is room to pull back in 10s, and I'm a better buyer somewhere down here. So I've pretty much lightened up on a lot of my 10-year position from this rally the last couple of weeks, and I'm pretty light bonds. So I'm still bullish, but I want to buy on a pullback. Gold. We had a nice buys in gold the last couple of signals. And I'm more constructive on, bonds and gold have been really trading pretty much in lockstep. But again, the last couple of weeks, they kind of did their own thing. You had some steep sell-offs when the market was getting hit hard. You had the margin calls, a lot of liquidity selling. But now the market's kind of firmed back up. If you look at the gold volatility, the vol of the gold vol, it's settled in. And I think this move up on gold and a strong dollar is actually, you're going to see the same move together. So I think the market's just doesn't have a lot of places to be. I think there's still a lot of people just raising cash that are short dollars. whether they borrowed in dollars, etc. Liquidity crisis, that's creating a bid to the dollar. But the same liquidity crisis and concerns around monetary policy going forward, whether that's a full-blown monetary crisis. We got Lagarde trying to stuff digital currency down Europe. I think they're going to try to do similar long-term here in the US. So we got a monetary crisis on the horizon, but people are going to start to shift away from central banks and start to think that this MMT fiscal extreme measures are coming, which is going to push people into gold, and you're starting to see that. So we took some profit into the week of middle of March. You had a nice 50% retrace almost of the move off the lows when we held in front of pi. It was a double bottom in the early part of March. We were buyers last week. I'm still core long. I think we're probably going to make a new high here and then run towards 1800. Yeah, that's that. Oil. So you don't necessarily have to chase this morning, but just continue to be a better buyer on pullbacks. Oil. I have had, if we do a top down there, I've highlighted several times that there is a long-term bear market in crude. It has to do with this deflationary trend we've been in since the last crisis in 2008, and it's just been nothing but lower highs, all in line with the trend line, all in line with the top of the regression channels. And now we've actually, big picture, gotten to the bottom of some of that trend. So holding 20, there's reason to think that maybe that's the low. So I'm starting to get a little bit more bullish of everything in global macro. Oil will be the first thing I'll probably start to get bullish on. But I want to see the daily cycle start to turn up and shape up first. So I'm actually small core short. We sold late last week. Or on Sunday night, we actually got the gap down. I didn't cover anything. I kind of wish I had. It's just gonna be a lot of headlines. You could see Trump's doing his thing as far as talking about, he's doing his deal, his jawboning as far as doing a deal. He's going to try to influence this OPEC meeting. I think is Thursday. So there's going to be a lot of back and forth. We just have to try to stay a little bit wider with all the volatility in oil. I've never seen it this high. I mean, the OVX oil volatility index is still above 120. And it's just, it's really unprecedented. It's insane. So still need that oil vol to come down also to get more bullish on oil. So staying small, course short. We're going to trade around the intermediate term. And I think that's it, guys. This morning I'm told my guys in the prop room, we're right kind of in the middle or no man's land. Let me show you. We talked about the big picture. Oh, here's that weekly cycle count that we absolutely nailed, so that we could probably see a low with this down here the week of the 23rd. And to have a 2 or 3 week reaction on the up makes perfect sense. So I think this week is I think we do have a good shot at making that lower high with the daily and then testing for another move lower. But we're just going to watch this pivot 200, that 8. It's going to be key with how we shape up in the end of the week. Now the intermediate term, and then I'll wrap this up, is yeah, what I was saying is we're a little bit in no man's land. So we talked about the daily cycle of 4 hour. All right, this is key. This is key. So I highlighted, this was that turn I highlighted with that daily cycle that I drew when we were looking at the Dow chart. So this was the pivot right there that changed the near term, intermediate term to a little bit more constructive. And we haven't been able to get below that spot yet. So that's kind of defining us on the downside. And then notice how we failed at the bands, tried to sell off, and then we kind of caught the lower end of the bands. And notice how the bands are all laying on top of each other now. That's very indicative of a range trade. So we have an intermediate term range trade, and this price action this morning is kind of right in the middle of the better edges. So near term, Yeah, I would rather be a little bit short, kind of with the top of this cycle. But you could just as easily pull back here and then catch these levels this morning around the bands on the 15-minute, 30-minute, and then have a nice little day trade rally. So I'm still a little bit more, again, I think that sets up for a little bit stronger of a move to the upside. But we'll see. I mean, if you come down here and you can't hold the bands and then just retest these lows, I mean, that is what it is. Day trade, I'll probably buy into this dip. If it breaks, then I'll lean short into these lows and then play the next near term cycle. The point being is that the intermediate term is sideways right now, and that the trigger is going to be right here. If we get above here, then you look to the 200, you look to pi, and that's kind of that move on the daily cycle into the end of the week. And then on the downside, this is the key spot that we keep holding. We take that out, then you're going to open up the door into the end of the week for a retest of the lows. Okay, guys, hope that helps. Enjoy the rest of your trading day. Again, check. Hopefully, you guys are on the email list. If you're getting this, you probably are. But sign up for the Cycle Edge, and we'll see some of you guys working. Ridiculous. There it goes. So I put it in at a buck for the next 30 days. So come join us. That gets you in the private Cycle Edge room. I'm putting all our real-time alerts, everything, any trade we're doing, near term, intermediate term, long term. I think that's all I got. And again, we'll have some stuff if you're interested in the prop programs or options team. I'm gonna have some discount this week also. Just because everything that's going on, people haven't been at work, and just we've had the best 3 months of trading we've ever had since I started the company. Meanwhile, everybody else is absolutely getting smoked. So I want to kind of give people some incentive to join our team. So I'm just going to do some discounted pricing. All right, talk to you guys a little later.